We thought it would be fun this year to spend just a couple of minutes as we kick off SMBash. The one thing that we all have in common in the room really is ETA. We support the entrepreneurship through acquisition space. Many of you are searching. Many of you are successful searchers. Some of you are failed searchers, and that's okay too. We're getting some round of applause. Good. But ETA really is at the heart of SMBash. That's what we all have in common. And of course, SMB Law Group, where I work and co-founded with my partners, Sam and Eric, and David is our COO, for those that don't know. We have a unique place in the ecosystem just in sheer volume of deals that we see. And so several years into our journey with SMB Law Group, I thought it'd be kind of fun to spend a couple of minutes before we invite Michael Girdley on stage to talk about lessons learned from business failures to maybe talk about some successes. So bear with me for just a minute, if I can find the right button. So a couple quick, just kind of general macro stats. Of course, it depends on who you ask, the quality of the data here, but roughly, in a recent survey, almost half of small business owners have said that they plan to sell within the next 3 years. Now, we all know that 50% of businesses that plan to sell are not all going to sell, right? There are a lot of unsellable small businesses out there, and that's fine, but the point is this is a massive market, right? $37 billion in 7A loans approved in fiscal year 2025. Now, we can have a very healthy debate, and I hope we do over the next couple of days over whether that's a good thing or whether that's a bad thing. But one thing that it is reflective of how much of the backbone of the American economy small businesses represent. One interesting thing that I thought, just to contrast, okay, some of the data that I'm going to talk about here in a second, we've gleaned from 370 deals that we've done in one law firm in 4 years, okay? Compare that with traditional search. The GSB Search Fund study from 2024, the last year they published, tracked 681 closed traditional search fund searches since 1984, right? Completely different ballgame in the self-funded search space. And so much of that small business economy is represented in self-funded search as opposed to what gets a lot of the limelight out there in the books and treatises and law school classrooms, right? The reality is self-funded search are where deals are getting done. Of course, it's not all sunshine and lollipops, right? 3.7% 7A loan default rate in 2024. When I was pulling this together, I couldn't find the 2025 stats, though I think it's up slightly. That was the highest in 2024 at that point that it had been since 2012, right? Kind of bottom of the financial crisis. There's a lot going out there, right? There's more competition, which is leading to higher multiples, which is leading to more leverage, which is leading to more risk, and that's scary when you're personally guaranteeing a multi-million-dollar loan. And of course, this is true default rates. We all know in this room, and again, I hope we all kind of discuss this and understand this over the next couple of days, default rates don't tell the whole story, right? There are a lot of businesses that are getting in trouble, getting into debt workouts with lenders, getting into really difficult situations that never ultimately bear out in those default rates. So a little bit of the sobering statistics along with those deals. So what have we seen since we launched SMB Law Group in May of 2022? We're coming up in 2 weeks, will be our 4-year anniversary. Over 500 matters, 370 of those, when I pulled the stats, it's probably, we're closing daily, it's probably 373 at this point, in 4 years, right? You can see our ramp up, half year 2022, 27 deals, up to peak in 2025 of 121 closed deals. We did 34 in Q1. On a run rate perspective, that should put us somewhere around 140 this year. We'll see. Q2, David probably has better visibility into Q2, but I don't think it's going to be 34. But there's a lot of deals happening, pushing $2 billion in deal volume, 40 states where we've done deals. ETA, as much as the popular states, everyone talks about them out there, Florida, Texas, California, hate on it all you want. There's a lot of business getting done there. The reality is deals are getting done all across the country. Asset versus stock sale breakdown. This one's a little bit surprising, right? Everyone thinks asset sales, right? We push asset sales. It's protective for buyers. There are a lot of great reasons to do asset sales, but just over a third of our deals are equity acquisitions, right? And that's for a lot of different reasons. A lot of equity deals getting done, not necessarily something to be afraid of, but something to be knowledgeable about and understand. Probably the most surprising statistic to me on here of the deals I tracked, split pretty evenly SBA and non-SBA. Okay, a lot of deals in our practice getting done even in this small business, Main Street, lower middle market that involve non-SBA debt, right? That could be 100% seller or mostly 100% seller financing. That could be independent sponsor or private equity deals that we're involved in. Obviously a large part of our portfolio, but not the lion's share. You could see a breakdown, size distribution of deals, kind of what you would expect in a self-funded search-focused law firm, but fairly, with that number of transactions, fairly representative, I think, of the self-funded search space in terms of size of deals. And then let's look at some terms. A little bit small, but hopefully you can see on the big screen here. Most fascinating thing to me as I ran the analytics, if you think about what was going on in the economy from 2022 to 2026, a lot of change going on in the economy. Interest rates increased rapidly 2022 into 2023. Seller notes, seller financing, unbelievably consistent. I mean, flatlined at 7% interest rates on secured and unsecured seller financing notes. That was a little bit surprising to me. Seller financing interest did not track the market. Median maturity at, I think that says 6 years. Oh, there we go. It's easier to see up here. However, very bimodal. I didn't put the percentages up here, but almost a third of our deals were 5-year maturity. Almost a third of our deals were 10 years of maturity. The other third was kind of a mix all over the place, right? 2 to 3, up to 10. So very consistent 5 or 10-year maturity on those notes. Couple of other interesting statistics there. About 20%, a fifth of our deals have contingencies in the seller notes. That's something for those of you going to some of the searcher sessions that you can glean out. Some of the tools that we have, even in the SBA program, to have the ability to kind of peg business valuation to performance. On the purchase side, about 2/3 of our deals include a net working capital adjustment. I include that almost for the opposite, right? A third of our deals have no working capital adjustment. Really interesting things going on out there. If you're in the private equity, lower middle market world, that would be a mind-blowing statistic. That should be like 99.8%, right? But a lot of deals getting done for a lot of reasons with and without working capital adjustments. Let's see here. I won't spend too much time in the kind of the wonky stuff. Median baskets for indemnities, non-competes, 5 years, very, very consistent. I wanted to include the percentage because just saying 5 years doesn't necessarily tell the story. Guys, every business deal almost has a 5-year non-compete. If your seller's asking for less, red flags. I tell this to every client. Interestingly, even in our practice, about 10% have some form of escrow or indemnity withholding. Not all deals use just seller notes, and that can be an important deal feature. And then about 13% of our deals with rollover equity. I actually ran the statistics. I was interested to see how this changed with the SBA SOPs moving last year. We surprisingly had more deals in 2025 going into 2026 with rollover equity than we did in 2024, even with the SOP changes. It's just changing how deals get done. without the SBA program as opposed to whether or not rollover equity is involved. I thought that was a really interesting statistic. And then the last thing I wanted to talk through, sectors. We get asked all the time, what are you seeing out there? Lots of HVAC companies, lots of plumbing companies. The candid answer, not as much as you'd think anymore. It's so popular with private equity that I love you all, but almost none of you in this room are going to compete on multiple with private equity funds. So some of those really popular sectors just aren't moving as much in the self-funded search space. Beekeeping, space-related government contracting, dental equipment repair, supplements, sports camps, aviation parts supply, all over the place, guys. The opportunities out there are endless. If you're setting your sights on plumbing, HVAC, roofing, B2B marketing, and accounting. No shade to any of my accounting, marketing, et cetera folks in here. You're setting your sights too narrow. There's the landscape of possibilities are endless. And then the final thing I'll say, we put our money where our mouth is. We acquired too. My wife and I acquired a couple of months ago. Thank you. I should say my wife acquired. Feel free to ask her about Supreme Wraps. I threw up some stats there about the deal so you can see literally doing what you guys do. It's fun to be part of the team, not the outcast service provider. But all that's to say, we live, eat, and breathe ETA. We are so excited to be sharing this with you guys, both from SMB Law Group, Supreme Wraps, all the sponsors, and everyone. Thank you once again for being here. Really excited to spend time with you. And please make the most of it. Ask hard questions, ask pointed questions. And if you leave on Friday with your mind blown of possibilities, opportunities, new things to try, then we've done our job. So thanks, everyone. And with that, David, if you want to introduce Michael.
Yeah. Well, first, give a round of applause for Kevin, please. That was wonderful.